Alright, what's going on, guys? My name is Jeffrey Rodriguez and welcome to today's video. We're going to be talking about the 7 basic rules for every Forex trader. Alright guys, so we're going to be talking about the 7 basic rules for every Forex trader. And real quick, if you're new to my channel, make sure to hit that subscribe button right below this video. My channel is basically for Forex traders that aren't really getting the hang of things yet. I do post educational as well as weekly analysis videos on my channel. So with that being said, guys, let's go ahead and get right into this video. The 7 basic rules for Forex traders. Rule number 1, don't use robots. Don't use robots. Alright guys, robots a lot of the times are just, these things that get a lot of new traders hooked. They're like, oh, I can make money automatically. This is going to be great. I don't have to do anything. I don't have to learn anything. I can just start making money. And that's the wrong mentality to have, guys. Whenever you're getting into trading, you want to understand the skill set itself. The skill set of trading is what will set you free from whatever you're doing currently. But you have to understand that skill set. You can't rely on something or someone else to actually do it for you, right? You have to learn it yourself because everybody's going to see the markets a little bit differently. All right, guys, rule number 2, less information is best. And what I mean by this is real simple. A lot of times whenever you get into trading, me especially as a new trader, I was searching through every single video on YouTube I could find, every single trading guru, everything. But the problem is I was learning a whole bunch of different stuff, harmonic patterns, trend lines, ICT's concepts, market maker method, tons of different things that I was just trying to go through and figure out, oh, who should I actually learn from? And at the end of the day, over time in the industry, you actually start to see what works and what doesn't work just based off of the people that you're watching and how they teach and the information that they share with you. And for me, ICT's information is just what worked. But you want to find a strategy that works for you, and whether that be technical analysis, whatever it is, you want to stick to that strategy. You want to learn everything about that specific strategy and use that. Set your rules and then stick to your rules. Don't try to learn a strategy and then go learn every other strategy too. Master your strategy first. Rule number 3, stick to a daily and 4-hour time frame. So stick to a daily and H4. All that means is you want to be working and operating off of a higher time frame, guys. This is what the big institutions and the banks do. So you want to also do the same thing. By operating off of a lower time frame, you're going to get caught up and then be tempted to enter or exit a lot more than you actually should because there's a lot more candles that you're going to see. So you want to focus primarily on sticking to a daily and a 4-hour time frame. This is going to help you so much in your trading because you're going to catch a lot bigger moves. Now your stop loss may be 30 to 50 pips, but that's okay, guys. Your target is going to be 70 to 100 pips, maybe even more. And a 4-hour and a daily is the absolute best time frame to work off of for a trader, in my opinion. Alright guys, so that leads us into rule number 4. Don't get stuck on the lower time frames. If you're somebody who's literally watching the charts on a 15 or a 5-minute time frame all day, you're going to be tempted to enter and exit the market tons of times throughout the day because you're going to think that you see a setup. The problem with that is you're going to blow your account immediately because you're trying to trade so often. You have to operate from a higher time frame where there's more probability behind your setup. On a lower time frame, you're operating off of very, very improbable levels. By using a higher time frame, you can move those higher time frame levels of support and resistance down to your 15 and 5-minute time frames and use that for your entries. But I would not be watching a 15 or 5-minute to look for trend or all that stuff. You want to focus on a higher time frame for that stuff. Rule number 5. This is a big one. Avoid big news. And the big news I'm talking about here, guys, is primarily FOMC and NFP. Those 2 days, you're basically just gambling if you're trying to trade. It's really not a good market environment for you to be operating in because what will happen is the market will do a lot of spikes. So you'll see a big shoot up, then a big shoot down. Maybe up was the intended direction, but they shoot it down first and then continue up. It's just not something you want to be a part of, especially if you're a newer trader, because you'll just blow an account, you'll put too much risk on. It's just not a good idea, guys. You want to focus on trading primarily Tuesdays, Wednesdays, and Thursdays, and occasionally Friday as long as it's not NFP. So that's that's my favorite days to trade, in my opinion. I would advise anybody out there who hasn't tried that before, use that. Don't try trading every single day. You know, you want to wait for your setup to form and then you want to execute on that. Okay guys, rule number 6 is really, really important. Trade what you see, not what you think. Even if you're an advanced trader, guys, the thing is, a lot of times you're trying to trade stuff that you're thinking all the time. You have to actually see it in the charts. Like, understand technical analysis, and then by understanding technical analysis, you'll be able to know what you're looking for. And then you're going to create a set of rules, a list, a checklist, and then you're going to check off day by day. As each part of the criteria is met, you want to check it off. And then that will allow you to know if you're going to be entering a trade that is a high probability or a low probability trade, because it's either going to meet all your rules or it's not. And it's real simple. If it meets your rules, trade it. If it doesn't meet your rules, don't trade it. Don't try to trade based off what you think all the time. Operate off of what you see. That's a big, big, big thing for you guys. I really hope that you implement this, guys. This was one of the biggest things in my trading, guys. Creating something that I had to follow, like a checklist or a rule book, to follow before entering a trade. By you doing that, you're creating more discipline for yourself as well as patience, because all of your criteria has to be met for you to enter the trade. So this is something that you guys should all practice. Even if you're not doing this currently, try it for a month. See how it works for you. If your trading improves, then you can implement that as part of your strategy. I will just fit rule number 7 up here, and that is going to be risk management. Always use proper risk management. For me, that's about 3 to 5% on my account for any trades that I'm in. So if I'm in 5 separate trades and I'm risking 5%, I'll risk 1% on each of the on each trade. So it's 5% of my whole account, and that's it. So you're not going to be risking 5% per trade. You're risking 5% of your whole account. So if it's $1,000, you're risking $50, and that $50 is all you can risk in order to risk 5%. A lot of people that are in trading and still trying to get the hang of it, like they just don't understand what's not working for them, it's typically risk management. So you want to have a set percentage that you know that you're risking on your account. Not only just a set percentage of your account, but you want to have a goal that you're shooting for in terms of a target for the week. Maybe you want to make $100 a day, and with your account size that is 10 pips, or that may be 100 pips. Whatever that is, you need to figure that out. Figure out what your stop loss needs to be for the total risk of the percentage size of your account. So if you have a $300 account, figure out what your stop loss needs to be on each trade in order to get or achieve that 3 to 5% risk level. And then you're operating then with so much more discipline. So this will help you keep from blowing your accounts, because you're risking a minimal amount per trade. And then the winners that you have, if you're operating off of a higher time frame like a daily or 4-hour, are going to be way bigger than your losses. So at the end of the day, you should be profitable. And this is how you win at trading, guys. These are the things that you need to do. If you enjoyed the video, guys, make sure to leave a thumbs up. And if you like this video, make sure to comment below, make more videos like this, and I will see you guys in the next one.
After this track, I might need me some lozenges. I ain't about to go soft. This rapping shit lately been pissing me off. Guess these words are kinda just at the tip of my tongue, but I'm still young and I hope I find the rhymes that'll live through time before that fat lady has sung. Cause when I'm inside this booth, feels like I rule the world. But I'll hop off my horse, hop in your Porsche, give it